Hello, people. Today is going to be a short one just to quickly give you the market update, and then we're going to carry on and see how the market plays out. But first things first, well, I've been filming these videos now for about 2-3 months, and I just want to take the time to give you guys a shout out because the videos are just 20 minutes long, right? As soon as I get on, all I want to do is get straight into it and then make sure I can fit in as much as I can in 20 minutes. But I don't really get a chance to shout you guys out. But in the future, when I move, I'm thinking of moving country soon. So in the future, when I do move, I'm going to have way more time to trade, and I'm also going to be doing some live streams on YouTube. So there we can go into way more depth. But quick shout out to the recent followers. We've got ZZX30468 blah blah blah. Shout out to you, big up. And we got Vishnu XS, big up. And we've got 8 days ago, we've got Pay Van Dien. I am terrible at names, honestly. It's like I never really learned how to read. But shout out to you guys. Keep the followers coming. It's great as I support as much of you as I can. The only way to say thank you is just by hitting that follow button and joining that Discord group. Talking about Discord, big shout out to Invisible J. He's just secured a nice 80% short, 50x, entered at 66,285, closed at, well, it may still be open, but closed at 65,136. That's a nice little move there, almost $1,000 move, and you'd be surprised how much you can make off of $1,000 just based off of nice risk management. Also, big shout out to, we've got someone else in here recently, International Sharks. This is my people from Nigeria. So big shout out. We had a nice 5x short, 7.6%. You might think, 7.6% compared to 80%. But no, honestly, when you actually leverage properly, you risk manage properly, this could also make you a significant chunk, at 5x. So well done, you guys, for taking the signals. Well done to actually, managing your trades properly. If you are taking the signals and, you're profitable, feel free to hit, and show us I don't really care about your P&Ls. I don't care about how much you put in the trade, but just, show the percentages, show that you're in winning trades, put it up on a profit wall, and, we'll all love to see it, and celebrate your successes. All right. So we're going to go straight into the price action, and we're going to see what Bitcoin has been up to. Well, Bitcoin has been in this range since. It's not really done much. All right. We were planning some trades as of yesterday. I'm just going to take a look at the potential trades we're looking at before we do anything. So we said we were looking out for, I gave quite a few trades yesterday. We said, all right, we're in this range. All right, we've got this, slight deviation from the range low, kind of poked out a bit. It wasn't as aggressive, so I was considering a potential reclaim back into that range. However, we had a nice little range. We had 4-hour supply above us. We had a nice tap from that range, tap 1, tap 2, and we didn't quite have a tap 3 at the bottom. All right, but as of yesterday, I was saying, right, well, trade number 1 is obviously a short from this range high. Okay, now this short from this range high, you shouldn't really enter this short until you get a change in market structure. Remember, guys, market structure is basically it's like a torch light. That's how I like to think about it. It's a torch. It's a torch telling you where the price action is about to go. And I'll give you a quick diagram, showing you how I think about market structure in a second. But we're looking for a change in market structure as we go up here. We call this a decisional leg. And if we get that change, yes, we can look to rotate that to the range. Now, remember what I say every day, ranges rotate. They go up, they go down, go up or go down. So I think we've got a nice short here. Perhaps a bit too late in terms of risk management entering that one. I didn't enter it. So if you did, well done. And we were saying, okay, trade number 2, if we break out of the range, which we didn't, so that's irrelevant now. Trade number 3, if we come and rotate from this range low, we're going to talk about that, see whether we did. And that was pretty much it. Now, the only scenario which I did not give a trade for was actually breaking down from this range. Now, What I did say we've got this daily level below us, which we're looking out for. But anyways, we'll talk about that now. So this is what price did. We at the range low, price came down and rotated down. If you got into that one, well done. If you successfully managed your risk, well done. No reason why you shouldn't get at least a 3R for that one. That means, oh nice, that means my dinner is ready. That means if you risked 1K, you're making 3K. If you risk 2K, you're making 6K. I did get a message yesterday from someone saying, right, can I go into more detail about risk management, understanding how it works and stuff like that? Yes and no. Yes, because risk management is a big topic, and in my opinion, risk management is the biggest, most important topic to understand when it comes to trading. All right, because if you can't manage your risk, yes, you're gonna make winning trades. Honestly, you could have a 99.99999% win rate and still be a losing trader. Okay, or you can have a 30% win rate and be a profitable trader. Why? Based off of risk management. If you look on YouTube, there are videos where people have entered trades just based off of flipping a coin, deciding whether to go long or short. All right, and with proper risk management, they've managed to actually be consistently profitable. So understanding risk management is huge. Now, can I teach risk management here? Yes and no. I've only got 20 minutes to go over it. I need to go over the price action. And secondly, for the people I teach one-to-one, I think it's kind of unfair to give all the juice and all the nuggets, for free. Why? Because they pay for it. And I do keep some, nuggets for them, and it's key that if you are looking to really take trading seriously, it's worth investing in your education as well. All right. What I mean by that is I've got one-to-one sessions. If you want to sit down with myself, I'm happy to sit down with you and go over the fundamentals of trading. All right, from A to B. Now, obviously, if you want to carry on watching these videos and pick up what you can, then great, go ahead, by all means. But yeah, I guess that's my answer to that. So let's see where we are, man. So we're in this range. All right, we look to be breaking down from this range, but let's see. Let's zoom straight in and see what's going on in this zone that we've been in for a while. But before we do that, remember I said to you, market structure is key. Market structure is the torch. Now, this is what I mean by market structure is the torch. Market structure is the torch because the way I think about changing market structure, you need to see a change in market structure before you enter a trade. What does that mean? That means if your trade, let's say your level is this, supply zone up there. Okay. Now, if your market structure is printing higher highs and higher lows on the way up to your level, don't think about entering a trade until you see that flip in market structure there. Okay. Now that flip takes place here. This is what we call a break in structure. All right. Now that break in structure is what you need to see to tell you that the market is starting to turn in the other direction. And for better risk to reward, what we do is we wait for the retracement and then we enter. So this is the fundamental model you need when entering trades, all right? Especially if you don't like playing around with indicators. Now, there are indicators that will help you predict turning points in price. For example, market cipher, for example, RSI, for example, MACD. There are loads of indicators, but you don't need an indicator to be a profitable trader. You really do not, okay, if you just follow market structure. This is your fundamental model for entering a trade, a flip in market structure here. All right. Now, this is obviously the bullish scenario. Now, what happens when we've got the bearish scenario? The bearish scenario is just the same thing but flipped over. All right. Here, instead of printing higher highs and higher lows, we're printing lower highs and lower lows. We're waiting for that flip, going from printing lower highs and lower lows to the first higher high, followed by the higher low, and then we're looking to enter on that, high low. Okay, this is basically your fundamental understanding of how to enter a trade. So if you're thinking, how do I confirm my trade? How do I know it's time to pull the trigger? It's based off of this. It's simple. Now, also, the lower your time frame, the more risky that entry is. The higher your time frame, the less risky it is. Okay, so if you're looking for a flipping market structure on a 1 minute to enter trades, yes, it will work sometimes, but you're going to get loads of those. You're going to get lots of false signals. All right, if you're looking for flips on a 5 minute, well, they're going to be more, you're going to have more confidence in that compared to the flip on a 1 minute. All right. Now, why do we need to see a change in market structure first before we enter a trade? Well, it's very, very, very simple. The way I like to think of it, I like to think of market structure as like a mountain. All right. here we have a mountain, okay? That mountain is going up and then it's going down. Right, we obviously want to know when price or when our person who is coming up of this mountain, so this is our guy over here, this is TJ. TJ is coming up this mountain. We want to know when it's time for him to start reversing up, okay? So as TJ is coming up this mountain, what are we seeing in market structure? We're seeing higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. So he is climbing up the mountain when there is an uptrend. All right, you get that? It's climbing up the mountain when there is an uptrend. Now, the moment we flip market structure, bang, we have the first, lower high and lower low. Why the hell would TJ still be climbing up the mountain? That's basically price. TJ is synonymous. I can't even say that word. Synonymous for price. If we've had that flipping market structure, why is he still climbing up the mountain? No, that flipping market structure tells us, whoops, TJ price is coming down, so TJ likes to go down the mountain now, okay? Now that's what we call a short, all right? So as we're going up the mountain, we're longing, down the mountain, we're shorting. Hope that kind of makes sense. It's not the most clear example, but I hope it makes sense. But that's why we need to see a change in market structure first, before we enter the trade, all right? Before we enter that trade. All right, so let's go straight into the price action. You see what I mean? 11 minutes left. Now we've got to go through everything in 11 minutes. But don't you worry. In the next few months, I will be doing live streams on YouTube. All right, so feel free to hit me up on there. Find Trade Journal on YouTube and subscribe to that. And I will be doing live streams on YouTube. I will probably look to transition off of TradingView in the foreseeable future. Okay. So here we have our range, and then here I look to have put a range that has formed at the bottom of our range, okay? And if we just follow the market structure inside our range, well, let's see what that looks like. Well, in terms of, remember guys, market structure comes first. After market structure, supply and demand. After supply and demand, order flow, then liquidity. So why don't we go in that order? So our market structure looks like this from the range high. Lower low, lower high, lower low, lower high, lower low, lower high, low low. Okay, so what does that mean now? That means this is the key level to break before we're looking for that flipping market structure, at least on the 4 hour. All right, but the 4 hour is going to take ages to play out. Well, why don't we go to the 1 hour? Okay, now on the 1 hour we have a little bit more definite market structure, in the sense that we can see more legs. We can see the legs, the impulses that allow our market structure on the 4 hour to come out the way they are. This is what I mean by understanding the different levels in terms of market structure. So let's see, we had that low low, we had that low high. But what we had to notice is that from this level, from this break of structure to that break of structure, yes, it was a pretty wide move. From this to that, all right, not so decisive. And look, from this to this, not so decisive. And guess what we formed? A range. That's the what's that word? That's basically the sign that we're about to range. Okay, when I call it the amplitude of your breaking structures. When your amplitude of your breaking structures is starting to decrease, that's the sign that you're about to range. Okay, so here we have our range. We have our tap number 1, tap number 2 on the range high, and tap number 1, tap number 2 on the range low. Now I was looking at this as a potential Trinity model 1, where we've got 1, 2, and 3 in order to take us up. Is that still viable? Of course, that's still viable. That's still viable, and that will come quite nicely into our PO3 idea, where this is our manipulation phase for that bullish expansion, which we talked about in great depth yesterday. If you want to take a look at that, feel free. All right, so what do I need to see then to justify that long? Well, what I need to see is I need to see a clear market structure change. All right, so why don't we look at this leg, this decisional leg, to see where that change could occur, or if that change has occurred. Well, on the 1 hour, what does our 1 hour look like? Well, 1 hour looks like, low, low, lower high, low, low, lower high, low, low. Cool. So on the 1 hour, we need this level to break first, something like this, before we can justify a long or potentially a trade there. All right. Look, we don't want to wait that long. We want to go on a 15-minute. Let's see if we can scalp this guy. Okay, on the 15-minute, now we've got more definite structure. On the 15-minute, we can kind of ignore this part, because we've got all this structure that's developed now. On the 15-minute, we can also see that we have this internal range that's developed. So what do we have here? We have the beautiful, what is known as you know, a range within a range within a range within a range. What do I mean by that? We have our big range over here. We have our internal range over here. If we zoom in a bit further, look what we've got again. We've got a nice little range over here in blue. And guess what we've got over here again? We've got a nice little range over here in gray. So I say this all the time. If you don't know how to trade ranges, you are missing out on 80% of the trades you could be entering in these markets. All right. More than 80%. Price is always, it's ranging more than it's trending. So why not understand how ranges work? All right. So anyway, so if we look at this range now, what do we know? Well, we know this is our range low. We know this is our range high. Okay. And we know at this range low, what are we looking for? We're looking for longs at discount. So we're looking to enter longs at discount, and we're looking to short at premium. All right, you guys should know this now because we go through this every single day. Longs at discount, shorts at premium. Why do we do that? Because why would you want to buy something at premium price, or why would you want to sell something, you know, at a discount? It just doesn't make logical sense. Everybody wants a deal. Human emotions are synchronized or configured in a way where you want the best deal, the best bang for your buck, the best value for your money. Which means if you go to the supermarket and you see a bottle of water from the same company with the same minerals, right? You have two bottles of water. Which one are you going to pick? If one is being sold at $3, one is at $1.5, you're going to pick the $1.5. Why? Because you can make more money off of buying that product. Same thing. If you're looking to sell a product, you want to sell that bottle of water that you bought for $1 or $1.5, would you be looking to sell it at $5 or would you be looking to sell it at $3? You'll be looking to sell it at premium at $5. All right. That's why we long at discount and short at premium. So anyways, what does that mean then? That means down here, we're looking for a long. Okay. So what we have to look at now to see what are the reasons to justify a long here. Well, first thing I can see is we've got this nice trend line of liquidity here. Stop loss, stop loss, stop loss, stop loss, stop loss, which means if we do get that rotation up, this is going to be a quick move. And we're going to take all of that liquidity over there and it's going to be a fuel. All right. Now let's see. On this decisional leg, do we have a change in market structure? Remember, that's our number one confirmation. Now, I think Bitcoin has done something cheeky today. It's done something a bit naughty today, but let's see let's look at the price action. Let's look at the market structure. So we've got, you know, lower highs, low, low high, low. I'm going to skip some of them because it gets a bit boring after a while. Low high, low. You know, we'll come all the way down. Low high, low. Oh, we can't even count that. We cannot. Yes, Bitcoin has done something cheeky today, and I'm sure this has caught out some traders, especially if you haven't taken my sessions, my one-to-one sessions. I'm sure this has caught you out. Why? Because a lot of you may have thought within this area here, weird market structure, right? It's not definite clear market structure. A lot of you might have thought, well, we've had a lower high, lower high, low here, but we have not. And the reason why I cannot give to you on this stream, because this is reserved for my students. So what that means is, right, our decisional level is still up here, especially on the 10-minute. If you're looking for that 10-minute break, you're not justifying a long on a 10-minute until that level gets taken. Okay, why? Because this is not classified as valid market structure based off of how we trade. All right. Now on the 5-minute, let's see if we've got anything on the 5-minute. On the 5-minute, lower high, low. Okay, yes, we come down a bit. All right, and lower high. Now I'm pretty sure this has caught so many people out. Why? Because yes, on a 5-minute, yes, we have a market structure level there. We've got a potential break of structure here. We've broken structure on the 5-minute. Okay, yeah. So what's the expectation of order flow? Expectation of order flow is a, you know, higher low, which could still be what we're doing for high. All right. So on the 5-minute, yes, we can start justifying a long. On the 10-minute, we can't really justify a long until this level is gone. Okay, so what are we going to do then? Are we going to play on the 5-minute or are we going to play on the 10-minute? Well, if on the 5-minute it's telling us, right, it's telling us that, hey, we're ready. But on the 10-minute it's saying, hey, we're not yet ready. Which one are you going to pick? Remember, the higher the time frame, the higher the confidence. So we're going to go for the 10-minute play here. We might miss out on the trade and that's fine. There are going to be plenty more trades. But on the 10-minute, we're going to look for that to go as soon as we break past that structure, look for that retracement for that continuation up. Why? The reason is, even if we lose out on this trade because of, waiting for extra confirmation, it's fine. Because if we do get that 10-minute confirmation, remember, we're thinking of this as a PO3. Remember, thinking this is a PO3, what does that mean the trade target is? That means the trade can really rotate all the way up here, okay? So that means even if we enter on that 10-minute there, and we look at our risk to reward, remember, the risk to reward is key. I think it's about there. That means if we hold this all the way to the target, we're still banking a 5x. So you put 10 grand, you got 50 grand, all right? You put 80 grand, what's 5 times 80? All right, you're really testing my maths now. About 400, all right? You put 10 pounds, you've got 50 pounds. You put 5 pounds, you've got 25 pounds. Or dollar, wherever you are in the world, or yen, all right? Or dirham, wherever you are in the world, yeah? So we're gonna wait for that 10-minute confirmation before we look to enter that one, all right? Now, as far as our trades go, that is the long scenario. That's the condition for me entering my next long. Now, as far as entering my next short, well, I'm gonna wait. I'm tempted to say, do you know what? Let's see when we break out of this range, enter on that retest just to bring it down. But look, this daily zone is so close to that level. So is it worth chasing price just for a tiny little drop here? Perhaps, depends on how risky you are and how good of a trader you are. But if you get a nice risk to reward on that flip in market structure, so what do I mean? If price comes out here, then rises back up, yeah, gets you another flip in market structure here. Yes, if that has a good risk to reward, then look, feel free to enter that. Because just a tiny trade based on a risk to reward from that level to that level, let's say it comes deeper into our zone, it's still a 4.5, all right? So not bad, okay? But we're looking at this zone for our next long as well, all right? So that's what we're currently playing. Well, Bitcoin is still in this massive range. It's been in this range for a very long time, and we're gonna wait. If someone tells you they know exactly where price is going, they're lying to you. So we're just gonna wait to see what happens. We know when Bitcoin's at a range, it can break up or it can break down. So we're gonna wait and see. So anyways, have a lovely evening, and I will see you tomorrow.